idiosyncratic risks and specific stock stories that have fed into all the market sentiment we've had. Looking at Europe particularly, are there any sectors where you start to see opportunities, perhaps autos and banks, that have been some of the worst performing this year?
Yeah, I think you have to start to look at some of those worst performing sectors and maybe find some that leverage, or is in fact the leverage simply a sign of underlying weakness that an investor should be more concerned about?
Johan Murray, Head of Investment at Hermes, stays with us. Now, coming up, South Africa releases inflation data today, with CPI expected to fall to 5.1%. What does it mean for the Reserve Bank's rate decision tomorrow? And later, we'll talk all things central banks when we speak with the chief economist of the OECD, Laurence Boone. That conversation at 11:30 a.m. UK time. And when you're travelling to work, if you have to step away from your TV screen, tune into Bloomberg Radio, live on your mobile device or on DAB Digital Radio in the London area. I'll be joining you there from 8 a.m. London time today. This is Bloomberg.
We are entering a golden age for human progress. 1 billion people have been lifted out of poverty as the world has urbanized. For the first time, more than half of us live in cities. Technology is expanding our horizons faster than ever before, connecting the world and creating opportunity for all. And while a diversified mix of energy resources will help meet growing demand, oil and gas remain absolutely fundamental to every aspect of the global economy. Demand for petrochemicals, the building blocks of countless products, continues to grow exponentially, driven by rapid expansion of growth markets. Here at ADNOC, we are redefining what it means to be a truly modern energy company.
To succeed, sometimes you must step into your comfort zone. Prepare, think ahead, anticipate. Choose your next move carefully. Time it to the millisecond and execute with precision. To succeed, you must do things differently. FX Pro. Trade like a pro.
The first thing I'd like to point out, Euromoney named us the world's best digital bank twice. One of their important points in the citation was that this digital transformation is more pervasive at DBS than most companies. And I think that's been an extremely important part of getting this recognition. A great opportunity to reimagine banking on the other side. I think we've only begun to scratch the surface.
At DBS, we certainly inculcate ESG, sustainability, gender equality, CSR into everything we do. It could be internal to the bank or to our customers or on our products or on our platforms. The whole concept of investing for profits is now morphing into not just investing for profits, but investing for good and investing for impact.
It really is about putting the customer at the center of everything that we do, having customer journey thinking in all our applications, in all our processes, and all our products are offering.
What I really see is an opportunity to work with them as constructive partners. Look, what we bring is connectivity. We can operate with billions of people, millions of merchants, with banks all over the world, with 200 countries, local legal regulations.
The biggest risk right now is actually an overheating. The question is, can the Fed, in the context of how it marches forward with monetary policy, can it continue to normalize rates in a way where they strike the right balance and we have a softer landing?
Daybreak Europe. It's 6:49 a.m. in London. Cable slightly on the front foot on a 128 handle this morning, and it looks like it could be a nice day in London, judging by that sparkly skyline. Let's check in on what's trending across the Bloomberg universe. On TikTok, our newsfeed built for Twitter, turmoil engulfed cryptos yesterday, with almost every major coin falling. Bitcoin fell as much as 13%. On Bloomberg.com, Theresa May heads to Brussels to fix a post-Brexit plan in time for the special European summit this weekend and our most read stories. In third place, the Nissan-Renault rivalry bursts into the open. In second, the US accuses China of continuing IP theft. And top, credit is showing deeper cracks from leveraged loans to junk bonds. Now, South Africa is releasing inflation data today. CPI is expected to come in at 5.2%. South Africa's Reserve Bank is aiming for inflation levels closer to 4.5%. The central bank will announce their next rate decision tomorrow. Joining us now from Johannesburg is Bloomberg's South Africa economics and government reporter, Amo Mbata. Amo, good to see you. What are the expectations for inflation due out today?
Well, as you rightly mentioned, the median estimate of about 18 economists in a survey done by Bloomberg is that inflation will have accelerated to 5.2% in October from about 4.9% in the previous month. And as you rightly mentioned, that the central bank targets to keep inflation within that 3 to 6% range. Having it edging so high towards the 6% mark will definitely mean that the central bank may raise rates for the first time this year when it makes its rates decision announcement this week.
Now, the rand has recovered a little bit from the lows that we hit in September, Amo, and we also have seen the oil price decline. Does that mean that during the rate decision tomorrow, we could see the central bank say that any upward move in inflation is likely to only be temporary?
Well, we know that the central bank governor, Lesetja Kganyago, has consistently said that any moves that the central bank makes, whether it's to hike rates or to keep them stable or unchanged, will be data dependent. As you said, the rand has recovered over the past month and we've seen oil prices reduce as well. However, another thing that is very important is that South Africa's growth is not looking very good for the year. While the central bank has said that it does not consider itself as a growth targeting institution because it targets to keep inflation within that 3 to 6% range, we may see it giving growth consideration and keeping rates unchanged. However, the International Monetary Fund has warned that if the central bank doesn't increase rates now, it may fall behind the curve. So in terms of credibility, the central bank is between a rock and a hard place in terms of whether they raise rates tomorrow or whether they keep them unchanged to possibly help bolster the slow growth that the country is currently experiencing.
Yeah, and that is a challenge the number of emerging markets are facing as well. Amo Mbata in Johannesburg, thank you so much for joining us today. Johan Murray, Head of Investment at Hermes, is still with us. Johan, given all the ructions that we've seen in global markets, emerging markets fallen a little bit sort of out of our attention, but we have seen a little bit of a recovery recently. Would now be the time to start coming back to emerging markets if you're not in there already?
Yes, you're right. I mean, I think emerging markets, if you like, sort of led us down, and they've been in a bit of a pause whilst the developed markets caught up. And I think there are still some strong fundamentals in some of the emerging market economies, but there are three things that I'm going to watch in particular. One is the dollar. What happens with the dollar, particularly driven by the Fed? Is there any risk that the Fed will pause rate rises either in December or next year that might cause the dollar to move rapidly in one direction or another? Secondly, I'm going to look at trade tensions. Do Trump and Xi Jinping manage to get together at the G20 and take the threat of 25% off the table? That would be, for me, a significant move. We've seen overnight Robert Lighthizer upping the ante ahead of the meetings, so who knows which way that will go.
Yeah.
And then lastly, I'm watching Chinese growth. Will it continue to deteriorate? Because if it does, that will weigh heavily on emerging markets.
Yeah, now on the Fed point, there have been talks recently, and we've seen it reflected in the markets, that there's fewer expectations in the markets of rate hikes in 2019. If everything that's happening in the global economy, global markets, does cause the Fed to pause, is that actually good for emerging markets because you see the dollar not strengthen so much, or is it actually bad because they catch the cold of concerns about global growth and global markets and just general risk off?
So I think I'd be inclined to go with the former, the view that if the Fed does pause, and there are hints out there without anything really factual to back them up at this point, then maybe the dollar doesn't strengthen as it has been, and we take a little break, and there's room for the emerging markets perhaps to begin some sort of resurgence back up to catch up with the US growth. And US growth still remains strong. It's the main driver of markets of the world economy at the moment.
How concerned are you that trade tensions are going to escalate?
Quite concerned if we're to go with Mr. Lighthizer remarks overnight there. If, were they simply a threat to make sure that the Chinese come to the table in a very positive frame of mind, possibly, or is this a genuine move from simply a trade war escalating into a tech war? This idea of theft of IP being the real reason that we've gone down this protectionist route.
Finally, on oil, I get differing views whenever I ask people on how important oil markets are to emerging markets in terms of correlations, etc. Are we over the worst of the rout in WTI and Brent?
I think we probably are. We've seen such a dramatic fall in such a short space of time. There has to be, one would think, some sort of OPEC and friends response at some point that will ease the pressure.
Thank you so much. Yoan Murray, Head of Investment at Hermes, joining us for the hour. Great to have you with us. And Yoan will be continuing the conversation with us on Bloomberg Radio at 7:30 a.m. UK time. Now, another top story we're watching, of course, is Italy. Let me bring you some news that has broken over the past few minutes. Italy's Matteo Salvini, Deputy Prime Minister, of course, may be open to budget revisions. This is according to Stampa. Now, bear in mind that BTP Bund spread closed yesterday at 326 basis points. We've seen that widen out. That's another thing, of course, to be watching among all the other dislocations that we've seen in markets over the past 24 hours or so. We'll be watching closely as to how BTP's open in just a few minutes in terms of the futures. Now, today we're asking the question on MLIV. When will the dip buyers emerge to halt this rout? You can join the debate. Reach out to us and the MLIV team, IB plus TV Go on your Bloomberg. This is Bloomberg.
It's a fire chief's job to give their firefighters every chance to be safe and save people. I know that if I protect my people, that they protect the public.
Innovation is really important to us at 3M. We're really encouraged to think about how we can use the technologies that we have to solve new challenges every day.
All the new technology from 3M Scott saves seconds, minutes off of a rescue. That is the difference between somebody taking their last breath and walking away the next day.
Good morning, Asia. It's time to get to work. For traders, brokers, and investors, it's time for change. Starting December 2018, Eurex extends its trading hours in Asia, so you can extend your trading opportunities in the Asian time zones. Trade select liquid futures on Eurex Exchange, one of the leading derivatives exchanges in the world. Benefit from the success of benchmark futures such as DAX, MSCI, or the Euro Stocks 50 index futures, as well as interest rate futures. The Eurex extended trading hours will enable you to act on global issues in real time on your schedule and manage risk in a timely manner. Extended trading hours, extended opportunities. Trade Eurex Global Benchmark Futures.
Making every journey personal. Singapore Airlines, a great way to fly.
From Bloomberg's European headquarters in the City of London, I'm Naira Chahich. This is Bloomberg Daybreak Europe, and these are today's top stories. A brutal session in the US kicks Asia off deep in the red, but losses are paired and green shoots emerge in US and European futures. But do the cracks in credit tell a different story? All eyes on Brussels. The EU may move closer to sanctioning Italy over its budget, while UK Prime Minister May travels to the city to sell her Brexit deal. And Ghosn stays on at Renault. Nissan to vote on ousting the executive on Thursday. Can the car alliance survive the downfall of its architect? To Daybreak Europe. It's just gone 7 a.m. in London, so we're under an hour away from the European equity market open. Yesterday, we saw European equities close lower by more than 1%. We saw the same for US equities, the S&P 500 briefly flirting with a correction. Of course, Apple in a bear market. It was a punishing session for US stocks. We've seen Asia in the red, but it looks like we could see a little bit of a rebound today looking at the European futures. US futures are also moving higher. FTSE futures up by almost 1/4 percentage point. DAX futures higher by 0.6%. CAC 40 futures also moving higher by 0.5%. So does this mean that the dip buyers are starting to come in to the equity market, or will this just be a very short-lived relief rally after the pain that we saw yesterday? And of course, credit still a big question with those spreads widening out in investment grade to 2-year highs. Let's talk about another part of the bond market, which of course is fixed income. Now, the 10-year Treasury yield has not moved a whole amount throughout all this. We're on a roughly 307 handle today. Looking at what's happening here, looks like we could see a bit of tightening in the BTP Bund spread. Yesterday, that spread closed at 326 basis points. We've had some comments reported in La Stampa from Matteo Salvini that might be calming markets slightly. Meanwhile, the finance minister Giovanni Tria saying he's concerned about the spread. So this is how it looks like we're going to see the open here in European bond markets. Money moving out of bunds, money moving into Italian bonds, and judging by the futures, you can see not a lot of movement in the 10-year. We have seen it move high about a basis point, and the move in the futures markets seems to reflect that as well. But now let's check in on the markets in Asia, and Juliet Sali in Singapore has more. Juliet, not looking quite so bad as we were at the beginning of the session, but we are still in the red.
We are on the MSCI Asia Pacific Index in Naira, but you can see this rebound coming through in Chinese and Hong Kong equities. The CSI 300 closing higher by around 1/3%. Garfield Reynolds on the MLive team saying, is this a dead cat bounce? Although he put it in a little bit of a more interesting term than what I've done. The Indian market coming under pressure despite the fact, of course, that you saw some of those oil refiners rally. We have seen a lot of the energy stocks, so as you would expect, being hit hard by that fall in crude prices in the US session. Australia's market very commodity based, down by 0.5%, and a lot of the EMs also hit hard by that fall in crude, such as Malaysia's market off by around 1%. Japan's index closed out the session weaker by 0.4%, although we did see Nissan rebound slightly today from that 5.5% slump yesterday. Having a look at some of the other market movers, you have seen not only a major risk off in terms of equities and commodities, but also in terms of Asian dollar bonds, particularly the commodity dollar bonds, down by 3.1% on that index there. And the dollar was a little bit mixed against Asian currencies, but some of these energy currencies very much hit hard. So the Malaysian ringgit down around 0.25% against the dollar. And despite this risk-off mood generally, you actually saw the US dollar hold some strength against the Japanese yen today. Traders saying that the yen is being vulnerable to a short squeeze in terms of some of the crosses like the Kiwi, like the Aussie, ahead of the Thanksgiving holiday. Naira.
Juliet Sali in Singapore, thank you so much. Now, today we're asking the question on MLIV, appropriate, of course, with the stomach-churning day we saw in markets yesterday. When will the dip buyers emerge to halt this rout? You can join the debate. Reach out to us and the MLIV team, IB plus TV Go on your Bloomberg. Now let's get the Bloomberg First Word News with Desley Humphrey in Dubai. Desley, hi.
Hi, Naira. The US has accused China of continuing a state-backed campaign of intellectual property and technology theft. The new accusations come in a detailed 53-page report released by US Trade Representative Robert Lighthizer. His office just 10 days before Trump is due to meet Xi on the sidelines of the G20 summit. The timing of the report appears to be a move by more hawkish members of Trump's administration to bolster their case ahead of the summit as other cabinet members push for a resumption of trade negotiations. UK Prime Minister Theresa May heads to Brussels later for more talks on the draft Brexit deal she's agreed with the EU. She's been told there can be no more negotiations, but her critics back home are demanding she secure a better arrangement. May will meet with European Commission President Jean-Claude Juncker this evening ahead of the special summit of EU leaders in Brussels on Sunday. President Donald Trump says he won't let the murder of US-based columnist Jamal Khashoggi jeopardise relationships with Saudi Arabia. In a statement headlined America First, Trump said he would stand by Saudi Arabia regardless of whether Crown Prince Mohammed bin Salman ordered Khashoggi's death. The president's comments drew swift backlash from Republicans and Democrats in Congress who have for weeks decried the murder and the Crown Prince's alleged role.
Because it's America first for me. It's all about America first. We're not going to give up hundreds of billions of dollars in orders and let Russia, China, and everybody else have them. It's all about, for me, very simple. It's America first.
Global News 24 hours a day on air and at TikTok and Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. Back to you, Naira.
Thank you so much, Desley Humphrey in Dubai. Now let's just bring you some breaking news on Airbus just crossing the Bloomberg. Airbus is naming Infineon's Dominic Assam as the next CFO. So the Infineon CFO, Dominic Assam, is to move to Airbus in April 2019. That is what we're learning. And also Airbus naming Michael Schulhorn as COO. There were some reports in the past couple of days that Airbus was to fill the top finance and operational posts. So we are getting this confirmation now of Infineon's Dominic Assam as the next CFO. Now, it was one of the worst single-session losses since 2015, with simmering weakness across assets boiling over yesterday to leave investors with virtually nowhere to hide. US stocks buckled for a second day, sending the S&P 500 careering towards a correction. Asian stocks followed on earlier in the session, but we're now seeing a slight rebound in Chinese equities, while credit markets, recently impervious, have shown signs of shaking apart. Joining us now is Eric Lonergan to discuss all this, fund manager at M&G Investments. Eric, great to have you with us. Let's just start with the MLIV question after the day that we saw yesterday, which is, when will the dip buyers emerge?
Yeah, well, I think it's a bit of a more nuanced reality, because it depends which dip you mean. I mean, when we spoke last, maybe about a month ago or so, of course, everybody was terrified about what's happening in emerging markets. If you look, actually, and we spoke at the time about Chinese equities, about emerging market bonds, and actually what's interesting is how well those have been performing this month. So you have been making money in Chinese equities, in Korean equities, and emerging market debt is up. So I actually think it's a much more differentiated world than it looks like on a kind of high-frequency snapshot in one afternoon yesterday.
Yeah.
So I think those have been dips, if you want to call it, or phases of trauma that have been worth entering. You know, the important point is always to stand back and say how much you're getting paid, where is their value, do you think what markets are doing is emotional, behavioral, or do you think it's driven by underlying fundamentals? I mean, the reality is U.S. equities have been trading on a very, very elevated premium relative to the rest of the world. This year, that premium has widened very significantly. If you look at credit markets, I mean, credit markets have been having a pretty extraordinary party. They've been a very, very pleasant place to be, you know, with fabulous Sharpe ratios. You haven't had much volatility. You've had very steady returns. To be honest, the credit markets have absolutely been ripe for an aggressive repricing, particularly given what the Fed has been doing. So I think you've got to look elsewhere. You know, the interesting question here is whether U.S. equities are starting to get attractive now.
Yeah, and to that point, I mean, if you're looking at U.S. futures and European futures, the answer to that question could be today, if we see European and U.S. equities rise. But the question becomes then, do we see a retesting of the lows again, rather than any kind of sustained buying, I guess? You were talking about a differentiated market. JP Morgan has talked about about an uncorrelated bear market. Is that what we're in, Eric?
No, I mean, bear market doesn't really mean very much.
Yeah.
I think we are in an uncorrelated world, absolutely. I mean, there's been one unifying theme, which has been a rising Fed funds rate, rising two-year yields, which has been dominating markets largely for the last 12 months to varying degrees of significance. That came to the fore, first of all, in emerging markets, as we've seen, with all the dollar leverage to emerging markets getting hit the most aggressively. Now it has kind of finally infected the credit market, and I think that's having greater impact in the US. I think that, the really important call here, and I think it's plausibly the case, is whether the Fed pauses, more than pauses, whether the Fed pretty much says we're entering neutral territory here. We're going to start, there's a lot of discussion now behind the scenes that the Fed might move to an average inflation target, which I think would be an extremely sensible thing to do. Again, it's classic Trump. He's almost stumbled accidentally upon a truth. I actually think his criticisms, despite the fact that the language is over the top of the Fed, in many ways are opposite.
Yeah.
They really need to reconsider what they're doing. A recession would be a disaster. Frankly, if the inflation rate went to 2 or 2.5%, that would be good news for the economic system. It's really not an inflation problem. So I think there's a very plausible scenario here where over the next 3 to 6 months, markets calm down in their beliefs about interest rates, which would mean a very aggressive repricing of risk assets.
Right. In terms of risk assets, you were saying that now could be an opportunity in US equities when I asked you the question of when will the dip buyers come in, and I then said perhaps today's the day with US equities pointing higher. But can US equities meaningfully rebound while we still see credit suffering?
Well, I don't know. I mean, I think, values, if credit keeps on behaving like this, value is going to reassert itself quite quickly. I think, again, one has to think very carefully about what's going on in the credit market. I mean, the reality is corporate profits are very strong. Default rates are actually fundamentally very low, even though they're picking up.
Right now?
Well, no, because I didn't know. But let me explain why. Because I don't think its starting point was particularly attractive. I can find much higher returns elsewhere. Now, if you're a dedicated fixed income market, it depends what your opportunity cost is. Personally, as a global multi-asset and macro investor, I can find much better value than in US credit elsewhere. I'm getting paid 9 and 10% real to own Chinese equities. I think you can make 60 or 70% in European equities. I mean, those levels of returns are not available in the US credit market to me. Having said that, I think what's happening in the credit market, we know what the problem is. It's been flagged now for over 12, 18 months, which is gross corporate leverage is high, even though, interest cover is actually pretty good within the US corporate sector. So I don't think this is a fundamental problem, but I think it's a major repricing of asset markets, which amplifies the effect of the Fed. So what the Fed has done up until now has been relatively trivial, but it's a bit like tapering. It can have big consequences when it gets amplified through other parts of the market, and that's what we're seeing currently.
Yeah, leveraged loans, that part of the credit market, haven't done quite as badly as the rest so far year to date. If that then becomes the next shoe to fall, is that the point of capitulation then where we could see recovery, or is that then, oh gosh, this has really gotten so terrible now and people take flight even more?
Well, you've got to remember, so leveraged loans are variable interest rate, so they don't suffer as much. So I don't think there's particularly information there. I think but I think the reality is the corporate sector has got very leveraged. They've responded logically in many ways to where interest rates have been and what the Fed has been doing with policy. But that is a material deterioration in the quality of their balance sheets. We've seen covenant criteria deteriorating and easing. So I don't think we should be surprised. I haven't liked credit for quite some time. We haven't done any credit in any of our portfolios. Where you've had the option, I think there's been a big opportunity to go short credit relative to equity, and that's broadly panning out. But I suspect at some point in the not too distant future, this credit market is going to calm down, because I don't think there's a major fundamental problem there. As I said, I think it's an endogenous repricing of risk within that market. I think what may be more significant, though, is it's absolutely going to get the Fed to rethink what they're doing.
Okay, and we'll carry on more with this with Eric Lonergan, fund manager at M&G Investments, who stays with us. Coming up, the EU releases its opinion on Rome's budget plans, yields on 10-year bonds down 8 basis points, 3.54%. So no doubt we are seeing tightening on that BTP bund spread as well. Coming up later, we speak with the EU's Economic and Monetary Commissioner, Pierre Moscovici. That conversation after 12 p.m. UK time. And when you're travelling to work, if you have to step away from the TV, tune into Bloomberg Radio, live on your mobile device or on DAB digital radio in the London area. This is Bloomberg.
say imagination is the mother of innovation, and competition drives the change we need to evolve and grow. By studying the past, we learn how to improve. New technology gives us the opportunity to move forward, reinventing the world around us, reimagining what is possible. We think it's time for a change. Tigerweight, trading evolved.
The Dangote Group stands at the forefront of African enterprise. Since 1978, we've touched the lives of millions of people by meeting their basic needs. Our belief in the promise of Africa has taken us into 14 African countries. With substantial investments that will propel the continent towards greater prosperity, promising jobs, improved standards of living, and economic growth. Dangote, for an empowered Africa.
In London, which means we are 42 minutes away from the European equity market open. Let's check in on the markets then. And we have seen quite a lot of red in the Asian session following on from that punishing session in the US yesterday. But the MSCI Asia Pacific Index has come off its lows, and it is not red across the board. We've seen Japan weaker, but Chinese and Hong Kong shares have been gaining. Meanwhile, crude had a bad day yesterday, down 6%, hitting its lowest in a year, but rebounding a little bit today. Oil volatility certainly on the rise. The 10-year Treasury yield is fairly steady on a 307 handle, but we've got to look at the BTP yield because that is down 7 basis points. The BTP Bund spread closing up a little as well. We closed at 326 yesterday. We're at 317 now. We've had a headline from La Stampa that Matteo Salvini has said that budget revisions might be on the cards. European equities could open higher. We could see a little bit of a rebound, up 0.5% on Euro Stoxx 50 futures, and US futures also pointing higher as well. So are the dip buyers coming back in today? And that brings me to today's MLIV question. When will the dip buyers emerge to halt this rout? You can join the debate. Reach out to us and the MLIV team, IB plus TV Go on your Bloomberg. Now let's get the Bloomberg Business Flash. Desley Humphreys with us from Dubai. Hi, Desley.
Hi, Naira. Tensions between Nissan and Renault over the future of their car-making partnership have exploded into the open as the downfall of Chairman Carlos Ghosn roils the automotive industry. The two companies have drastically differed their reactions to the arrest in Japan on suspicion of financial offences. Yesterday evening in Paris, Renault's board stopped short of firing the Nissan chief. By contrast, it said it intends to dismiss the chairman. Its board meets tomorrow. The Alphabet chairman says he's not confident Google will be better off bringing censored search engine to China. A key goal of Sundar Pichai, Google pulled out of mainland China in 2010 when founders Sergey Brin and Larry Page decided that censorship was unacceptable. Chairman John Hennessy told Bloomberg it's a dilemma for any company wanting to operate in China.
Anybody who does business in China compromises some of their core values, every single company, because the laws in China are quite a bit different than they are in our own country. The question that I think comes to my mind and that I struggle with is, are we better off giving Chinese citizens a decent search engine, a capable search engine, even if it is restricted and censored in some cases, than a search engine that's not very good? And does that improve the quality of their lives? And that's the struggle we have to work our way through.
ThyssenKrupp has reported full-year earnings largely in line with its lowered profit forecast. The embattled German industrial giant prepares to split itself in two. The Essen-based company said full fiscal year net profit income dropped to 60 million euros, down from its November 8th forecast for 100 million euros. ThyssenKrupp is facing lower profits due to a provision for antitrust risk and lower than expected earnings at its elevator division. Mark Zuckerberg says he's standing by Facebook COO Sheryl Sandberg as they face criticism over the social network's handling of a recent scandal. Facebook's stock has plunged almost 40% since its July peak amid claims it compromised users' privacy and helped undermine democracies. Zuckerberg told CNN he has no plans to step down as chairman and also indicated Sandberg's position is secure.
Sheryl is a really important part of this company and is leading a lot of the efforts to address a lot of the biggest efforts that the biggest issues that we have. And she's been an important partner for me for 10 years. And I'm really proud of the work that we've done together. And I hope that we work together for decades more to come.
And that's your Bloomberg Business Flash. Naira.
Desi Humphrey in Dubai, thank you so much. Now, here's a look at what you should be watching today. At 8:30 a.m. UK time, Sweden's Riksbank releases its 2018 Financial Stability Report. Watch out for new economic forecasts from the OECD. Those are due at 10 a.m. UK time. And as we've been hearing, the European Commission publishes opinions on the budget plans of Euro area countries. Watch for comments on Italy's debt breaching EU fiscal rules. That comes at 11 a.m. UK time. For more insight on what the EU's report on Italy's debt could mean, Bloomberg's Kevin Costello joins us from Rome. Kevin, let me come to you first on a headline that we've seen just a few minutes ago, actually, in La Stampa. Matteo Salvini basically saying that he may be open to budget revisions. We are seeing BTP yields move lower, presumably on that report. Is this some hope that the markets can take from this?
I think it probably is. Now, Salvini has said before that he is certain that the spread with German yields will come down, but this seems to be the first time where there's a report that he may be willing to relax a little bit the stance on the budget itself. Now, the two things that could be affected would be the so-called citizens' income and even the lower retirement age, a thing that he has been championing all along.
Okay, and of course we're looking to see whether the EU could open its excessive deficit procedure against Italy on Wednesday. Tell us more about how that could unfold.
Well, that could take quite a while. The first thing, as you mentioned, is the report today on Italy's budget and, of course, on the budgets of the other Euro area nations. Now, the European Commission has made it clear that the Italian budget does not conform to EU rules, and it wants that budget to come into the EU shelter of those rules. And that's what we will be seeing today. Then the next step could be that they open what's called the excessive deficit procedure.
Thank you so much for joining us. Bloomberg's Kevin Costello in Rome, and Eric Lonergan, fund manager at M&G Investments, is still with us. Eric, if we don't get anything too concerning out of the report,